Hey, this is Jim. It's 2:36 p.m. in San Francisco, California on July the 16th. So I wanted to review the after hours trading in AMC and point out a couple other things, then ask you guys a question. Because some of what I'm showing you here on the screen represents areas of the market that I don't typically pay attention to, especially the nuances of time and sales after hours. It's just not part of my world. I capture my data through some other uh, methods. So first thing I want to point out is an interesting look at sort of price movement based on supply and demand. If you think about how this entire experiment started on Wall Street underneath the buttonwood tree, and you were trying to match up buyers and sellers to come up with an idea about price discovery, supply and demand, buyers and sellers matching them up. So if you look at this, this tall spike represents the close. So again, I'm on the West Coast, so 1 p.m. is the close as opposed to 4 p.m. in New York. But you can see the data fields changing over here as I mouse over the ticks, and that's just representing movement in time as I move to the right, just moving forward toward the close. So what you're looking at here is all of this data is happening in the last 5 seconds of trading. Okay, so you can see the hover there, right there, right there. So you can see 12:59:55. So we've got 5 seconds moving into the close, and you can see the green line above. That is represents the price with each tick that's represented here. Now, we already proved in last week's videos that trades that were executed here in the right-hand column, right-hand side, in time and sales are not even represented here on the tick chart and in the data on the far left right here. This is a data window, and then this is just the graphic display of the data, right? Volumes down here, prices up here. That's all it is. This is just turning into a graphic display of your data window. But what we found was that if the volume over here, the volume of the trade posted on time and sales is below 100 shares, that it never makes its way into the data window, and which means that it never makes its way into the tick chart, printing the price discovery, even though it was an actual trade that happened. And again, we speculated that if you want to put yourself in the shoes of somebody who has who wants to control and manipulate price, then it would be easy enough to break trades into smaller executions sizes and drop it below that 100 share minimum, thereby having the price to the trading action not reflected over here in the data window, which then means it's not reflected here on the tick chart, which means it's not reflected on the 1 minute bar and all the way up the food chain. So as you see, price ping-ponging between $4.34 and $4.33 during the last 5 seconds of trading on Friday, options expiration. You can see at the bottom of this pop-up window in red, you can see the volume. And that's just representing these little tiny red lines down here. So as I scroll forward the last 5 seconds of trading, you can see 300 shares, 1,100 shares, 300, 784, 300, 300, 100. You get the point. So as we move through here, you can see a relatively constant volume between 100 shares and what do we see, 1,800. We saw 2,000 somewhere, but it's basically that same kind of volume range for the last 5 seconds of trading, and then ping-ponging in a 1 penny range. Then it requires 250,000 shares, this monster spike right here, just to move the stock from 434 down to 433. Well, it makes you wonder if it makes you realize how large the sort of in the money options expiration consequences can be on a Friday, or on any day that they trade daily options too. Anytime you're moving into the close, when you're talking about a huge amount of money being bet in the options market, a 1 penny move, whereas it seems pretty inconsequential to you or I, could become a big deal when you are taking into account in the money options that have to be settled out. Doesn't matter if you're out of the money, because they're all going to settle at zero. Anyway, for whatever reason, you see 250,956 shares traded on the final tick of trading. And actually, that's 2 seconds after the close. I just noticed that. This is the actual cash market close, 1300. That's 1 o'clock my time. Technically, that trade right there is 2 seconds late. I didn't know you were allowed to do that, actually. That wasn't my intention of doing this video. When I first scrolled over, I thought that printed 1300. So that's kind of interesting. I didn't know you were allowed to do that. Anyway, I'll have to dig a little deeper into that, because that's odd. But anyway, there you see it. 1 o'clock and 2 seconds. You get this 250,956 volume print, and all it is able to do is move the stock from 434 down to 433 in this range. Then, 3 seconds after the close, you see this spike, not only recovering that 1 penny range from 433 to 434, but spiking up to 435 on a whopping 300 shares. So again, if you picture the original intention of Wall Street and people standing underneath that buttonwood tree and moving a stock's price up and down based on supply and demand, and how much supply and demand exists, you would have a really tough time making sense of that little tiny, 3 second window, 4 second window, whatever it is. So that's one thing I wanted to show you guys. Then the other thing I wanted to talk about is what you see over here, Form T. You see this Form T at bid, Form T at ask, and then, blocks of Form T trading. Well, Form T, the definition is, Form T is an electronic form that FINRA requires brokers to use for reporting equity trades executed outside of normal market hours. So Form T trades occur during extended hours, either before the market opens or after it closes, easy enough to understand and comprehend. Now, the interesting question I have for you guys, and I honestly, this isn't a teaser, I don't know the answer to this, but common sense leads me to believe that that I can guess at what the answer is. And that's that if you, well, backing up a minute here, this represents the last 30 minutes of after hours trading. So you can see right down here the timestamp 4:30 and 14 seconds. Then you move all the way up to the end of trading, and it's 4:59 and 51 seconds. So this represents roughly all the data contained in my time and sales window here contain roughly 30 minutes of trading activity, not only after hours, but the final 30 minutes of after hours trading going into after hours close. All right. So if we think in terms of the definition we just saw for Form T, and the definition is that it's all equity trades executed outside of normal business hours. Well, we're deep into after normal business hours, even at the bottom of the chart here, right at 4:30. Market closes at 1 o'clock here in San Francisco. So you have to ask yourself, why aren't we seeing 100% of these the trade condition as a Form T? So I asked this question here. Does this mean that all other trades that are not listed under Form T condition that also show a timestamp outside of normal hours, which all of these do, that these are dark pool trades that were executed during regular hours and are now being reported onto the consolidated tape after hours? So I'm saying here, I don't actually know the answer to this, but maybe you do. Again, this is not stuff that has any bearing on my model, and therefore I've never had to dive into the stuff that we're looking at here. So this is an honest question, and I'm sure there's somebody out there that can answer it for us. Now, I've already told you in a previous video that the rule, the sort of letter of the law for market makers is that they have to, that dark pool trades have to be reported to the consolidated tape within a reasonable period of time, which, again, if you've never heard me talk about this, that you have to admit that's the most squishy sort of, rule that you could set up. And it absolutely was designed to allow flexibility to interpret that however you want to and report whenever you want to. If a dark pool trade needed to be reported to the consolidated tape, meaning on a lit exchange, time and sale, shows up over here in your data window, shows up on your tick chart and every other time frame chart, then the dark pool activity wouldn't really be that much of a disadvantage to retail, because the larger whales are able to meet up in the dark pool, match buyers and sellers. Other people aren't allowed to front run them, which was the intent of the whole thing. But then, unless they were going to do a series of dark pool trades, there would be no reason to obscure that first dark pool trade from reflecting on the consolidated tape time and sales within, whatever, 5 seconds, 10 seconds, 15 seconds, 1 minute. I mean, pick it, right? So pick a time. But the fact that they allow them, that the letter of the law says that they just need to report it, reflect it onto the consolidated tape within a reasonable period of time, allows them to maybe not report until after hours. Well, if every one of these trades that appear over here during this 30-minute time period, again, after hours trading and the last 30 minutes of after hours trading, if every trade that you're seeing here that's not listed under a condition of a Form T represents a dark pool trade, then think about all of that potential, the potential movement that could be driven through natural supply and demand and price discovery if those trades were recorded and posted, even on a delay basis, into the consolidated tape during regular business trading hours. So again, I'm asking a serious question here. I don't actually know the answer to it, but logically, either every single trade we're seeing here clearly in after hours trading, and even the last 30 minutes of the after hours extended trading, unless every single trade condition is Form T, then logically it tells me that these were trades that were executed during normal business hours. And again, remember, we're just looking at a small sliver of this action. You can see that these are relatively small. The size is relatively small of these non-Form T trades. But if I went through, see, there's an interesting one, 99, the size 99 there during presumably regular hours. But anyway, I have no idea if there were large trades, meaning anything over 100 shares, that were reported in the multiple hours of trading and after hours trading that were not Form T, meaning the larger the size, the more impact in theory it could have on driving price through price discovery during the regular market hours. So anyway, that's one more thing for you guys to all chew on and consider. I think it's really interesting. I had someone make a comment that I had contradicted myself in one of the earlier videos, meaning that I'm seeing a trade here in time and sale, but it did not show up in the data window. Well, this is data over here. This just happens to be time and sale data, whereas this is the data window defined as the actual trades that made their way over into the data window, which then, as a consequence, made their way into a tick trade that's displayed on the chart. So they're both data. I wasn't contradicting myself at all. It's just that this is lit exchange time and sales data, and like we proved in those two previous videos, all of the size that is sub 100 share trading size completely disappears into outer space and is not reflected on the in the data window, and as a result not reflected on the chart. Then the really potential smoking gun that we saw that was even more unusual in the video that's gaining some traction that we're trying to retweet and have Charles Payne take a look at, is obviously those out of sequence trades that were 4,000 share size or greater, 3 individual ones, and all listed as out of sequence. And so obviously meeting the minimum volume size threshold to not only be posted on time and sale, but to have made their way over here into the data window, and as a result onto the tick chart, and as a result of being a part of the tick chart, posted on the tick chart, they also would have been contained in the the 1 minute price bars and all these other things that active traders use during the trading session. So that's it on my side. You guys just comment in the comment section of either, I'm going to post this both to YouTube and to Twitter, make a comment and tell me if you can explain why not 100% of the after hour trades are listed as a condition form T, and then if my logic makes sense that these are dark pool trades that are finding their way onto the time and sales window after hours. Then maybe a third question, if that's the case, why in the world would they be would there be a size of 3 shares, 2 shares, 1 shares, 1 share, 44 shares, right? Again, those aren't form T. So if those were run through the dark pool during regular market hours, and the excuse they use for routing retail trades through the dark pool during regular hours is to bundle those into larger blocks, why do they appear in the time and sale as 3 shares, 2 shares, 1 share, and 44 shares, going into the after hours close? Anyway, interesting stuff to talk about. That's it from my side. Good luck.